to building wealth, we often think the answers lies in numbers, strategies, or the next big stock pick. But what if the real secret to financial success lies within us? How we think, behave, and make decisions? Morgan Housel's The Psychology of Money offers timeless insights into how emotions and behavior shape our financial outcomes, sometimes even more than pure intelligence or market knowledge. If you're looking to build a healthier, more resilient relationship with money, here are 7 key lessons from the book that could transform your financial journey. Hi there, welcome to holisticinvestment.in, where we simplify the world of personal finance for individual investors like you. Let's get into the video. Number 1, recognize the influence of luck and risk. While hard work is undeniably vital, isn't it true that success often hinges on factors beyond our control? Housel reminds us luck and risk are both the reality that every outcome in life is guided by forces other than individual effort. This perspective encourages humility, nudges us to honestly assess our circumstances and limitations. So why not align our future financial goals and life expectations with that reality? For instance, even a well-diversified mutual fund portfolio can underperform due to market risk, which highlights the importance of humility and long-term thinking. Lesson number 2, the art of patience. How compounding builds long-term wealth. Compound interest serves as a powerful mechanism for growing wealth over time. As Housel aptly puts it, growth is driven by compounding, which always takes time. Isn't this a lesson we have heard time and again from investing titans like Charlie Munger and Warren Buffett? The message is clear. Truly build generational wealth, one must maintain composure, stay calm, and embrace the process of waiting. Systematic investment plans, SIPs in mutual funds, are a great example of how compounding works silently over the years to build significant wealth. Isn't it this very patience that allows compounding to work its magic? Lesson number 3, practice humility and avoid overconfidence. When it comes to money, humility is essential. Why is it so important to recognize that luck plays a significant role in success? Bill Gates put it succinctly: success is a lousy teacher. It seduces smart people into thinking they can't lose. Isn't this a stark reminder of the dangers of overconfidence? Housel emphasized the same. Patience and humility aren't just key to building wealth, they make the entire journey more meaningful. Could it be that true success lies in our ability to stay grounded, acknowledging both our achievements and the role luck plays? Lesson number 4, the power of control. Building wealth through smart decisions. Financial success is often more about avoiding significant losses than chasing extraordinary returns. Isn't it better to focus on what's within your control, like managing your spending and savings rate, rather than relying on unpredictable factors like market performance? Housel elaborates on this idea with several examples, underscoring the importance of controlling your expenses, keeping your spending in check, and cultivating a sense of enough. Take Rajat Gupta, for example. Despite rising from the slums of Calcutta to top positions at McKinsey, he still fell prey to an insider trading scandal. Why? Because he lacked the sense of enough. Isn't it a powerful lesson that no matter how high you rise, without a clear sense of limits, you can still lose control? Lesson number 5, understanding your money blueprint. How personal experiences shape financial beliefs. Your financial habits are shaped by your upbringing, experiences, and cultural background. As Housel puts it, your personal experience with money represents perhaps 0.00001% of what's happened in the world, but perhaps 80% of how you think the world works. Isn't it fascinating how your individual money experiences are minuscule in the grand scheme of the global economy and have such a profound impact on how you perceive money and the financial system? This is why two people may react very differently to the same mutual fund investment, because their financial blueprints are rooted in unique past experiences. Doesn't this highlight the importance of understanding how deeply your personal history influences your financial perspective? Lesson number 6, upgrade your savings, not just your lifestyle. As your income grows, it's tempting to increase your spending accordingly. But isn't it wiser to save and invest a portion of every income boost? By doing so, you can reap substantial rewards over time, ensuring greater financial stability and enhancing your overall portfolio. The key here is simple. As your salary rises, shouldn't your spending rise at a slower pace, if at all? Being mindful of your expenditures and focusing on saving can make all the difference in the long run. Investing the surplus in mutual funds can help convert increased earnings into lasting wealth. Wouldn't it be better to prioritize financial growth over immediate gratification? Lesson number 7. Time, the most valuable asset money can buy. The true value of money lies in the control it grants over your time. As Morgan Housel wisely puts it, money's greatest intrinsic value, and this can't be overstated, is its ability to give you control over your time. Isn't that what we all ultimately seek? Freedom to choose how we spend our days? This idea encourages us to think twice before relying on personal loans or credit cards without necessity. After all, when you're weighted down by debt, how much freedom do you really have? Financial obligations can strip away your ability to pause, reflect, and make thoughtful decisions. That's why money isn't just about wealth, it's about reclaiming your time. So, what is the final takeaway from this video? Ultimately, wealth isn't just about accumulating assets, it's about gaining the freedom to make choices that align with our values and desires. So, the more control you have over your time and finances, the more opportunity you have to live life on your own terms. Instead of chasing material success, focus on creating financial independence, because that's where true freedom lies. It's not about how much you have, but much about how much you can do with what you have and how you choose to spend your most valuable resource, time. So, are you ready to take control of your financial future? Then you can start by making small, smart choices today that honor your goals and your time. So, if you would like personalized guidance on building real lasting wealth, click the link in the description to book your free consultation with one of our certified financial planner. Let's craft a plan that gives you not just money but true freedom. And if you find this video interesting, give it a like, share, and subscribe to your YouTube channel. And I will see you in the next video with much more smarter financial tips. Thank you for watching.
And definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.